Well, Asian Paints once again has managed to beat expectations, this despite the fact that it has been a tough quarter. But a super beat, especially on the volume growth front. The decorative volume growth has come in at 106% year on year. Now, Amit Syngle, the MD and CEO, says that the conditions at this point of time seem to be ripe for double-digit growth even in FY22. Remember that the last few quarters for Asian Paints have any which ways been very strong. You've been seeing pent-up demand, etc. come through, which has led to very strong double-digit growth. Now, on that strong base, Mr. Syngle is confident of double-digit growth even in FY22. For the quarter gone by, he says that April and July have been the strong months which have helped Asian Paints stay afloat. And he says that it's not just the decorative part of the business, which is of course their mainstay business, that has helped them do well, but also the industrial business as well as the projects business. So what exactly are the conditions at this point of time that is so conducive for good demand for the paint industry? Well, first up, Mr. Syngle highlights that the monsoons have been very strong, and when that happens, of course, it's the agrarian economy which is going to benefit. So the rural side of the market is going to benefit tremendously, which means that demand from the rural areas is going to be very strong. The second point is that the pent-up demand is still continuing. Remember that again, because of the second wave and the ensuing lockdowns, people were not able to complete their home painting tasks. So that demand will get carried forward to perhaps the next 2 quarters. Plus the second wave is also abating. So all of that will do well. And then in the second half of the fiscal, he notes that the Diwali season is going to be a little long. So that too will spur demand in the second half. So all these conditions, all of these triggers will sort of come together and lead to double-digit volume growth in FY22 as well. Now, of course, while they did very well on the top line, they did very well on the bottom line, I think the disappointing factor was the margins, unsurprisingly, because costs have seen significant inflation. Mr. Syngle says that, it's since the end of the third quarter that inflation has been problematic. In fact, he says that Q4 and Q1 have seen inflation to the extent of 20%. Now, they've taken price hikes of roughly about 3% in Q1, but he says that looking at the way costs moved, we will have to take more price hikes because there's still a bit of a deficit in pricing versus the cost inflation that has been seen. And he says that they've seen, they will consider price hike of 3%. But he does note as a relief factor that there are some signs that, this inflation trajectory is now decelerating, which means now costs will either stabilize or start moving lower. And besides, taking all these price hikes could hurt, paint demand as well. And we don't want that kind of a situation. But Mr. Syngle says that, from his experience, customers accept a 2 to 3% price hike. If it's more than that, then they will tend to downgrade. So, downtrade rather. So considering the trend in costs, they will take a balanced approach going forward towards price hikes.